On the lessor side, I certainly understand that we're keeping operating and finance, which is operating and capital, big picture-wise. Again, industry specific, I think some people are going to be surprised on some of the details. Because of revenue recognition alignment, we no longer are going to have special rules for real estate. So we don't have, if land value is 25% or more of land and building, we know we have a land operating lease. That's not the case anymore. And there's no requirement that title transfer to have a sales type lease. There's not automatically, nothing on my balance sheet for a land lease that might have substantially all the payments, or the payments substantially equal all of the fair value of the asset. You could have effectively a finance lease of land that we don't have under current GAAP. So there probably are some follow-on implications in that area. Probably some other areas I see is that people don't think about is if a lessee sells a lessor an asset and leases it back, if he has a failed sale leaseback, there's a purchase option or some other item that causes him to fail sale accounting, under current GAAP that doesn't impact the lessor. Under new GAAP, the lessor will effectively have a note receivable. He has a financing as well. So then he will also need to consider, what is my impairment guidance? I now have a receivable instead of I would have owned an asset. So there's kind of carry-on implications. What if I sell those receivables? Are they financial assets? Are they non-financial assets? So a lot of kind of day two things to think about that currently lessors, I think, may have not really been paying attention too much to the leases standard that for some might impact.